Welcome back to ACCA Masters. In this video we will talk about IAS 16, which deals with property, plant and equipment. In other words, we can say that we are talking about non-current assets of the company, that how to record them. So first of all, if we talk about the definition of asset, then it is something which arises as a result of any past event or transaction and which is owned by the entity and from which future economic benefits are probable. Now next we have few terms you should be familiar with. First of all, we have book value, then we have carrying value, after which we have historical value, and finally we have fair value. Let's say for example you have purchased an asset on year 0 and its cost was, let's say, $1,000. So this $1,000 at which you have purchased this asset will be its historical cost. Now at the end of each year you will less depreciation from this amount. Now this amount which we are getting here is book value or carrying value of the asset. So that means both of them are the exactly same thing. Now let's say after 1 or 2 years you want to sell out this asset, then you may require a market value at which you can sell out this asset, and that market value will be known as fair value of the asset. And some companies may also have a revaluation policy, but I don't think that it will be tested at this level. Anyways, if you are interested, then you may listen this part, otherwise you may skip it, okay? And don't worry if you don't understand it, because it will not be tested at this level. Some companies may also have revaluation policy at the end of each year. For example, instead of writing asset on its book value or carrying value, the companies may try to write them on its actual fair value at the end of each year, and that market value can be more or less than the book value of asset. In case if it is more than the book value of asset, then it will be credited to revaluation reserve, and if the market value is less than its book value, then it will be charged to the revaluation reserve first, and if there is any additional loss, then it will be expensed out in profit and loss account. And remember, the accounting treatment of depreciation is also the part of IAS 16. Okay, and we have already discussed it in our lecture number 9 of this course, in which first of all we talked about straight line method, and then we talked about reducing balance method with some examples. And if you recall about IAS2 inventories, in which we have studied that inventories must be valued at lower of its cost versus NRV or net realizable value. Please remember, this rule will not apply to IAS 16. Okay, but there will be only one case when the companies will be required to write their assets, I am talking about non-current assets, at their NRV, and it will be the case if the company is not going concern anymore. Then only in this case the companies will be required to record their assets at their expected selling price. So except for this case, we will never record our asset on NRV. And here we have one more point. Let's say the book value of the company's asset was $600. But after some years, the company has sold out this asset for $800. Then you can see that the company has earned gain of $200, gain of $200 in this case. Now this $200 will be credited to the gain on disposal. Please remember very important point, this gain is not the part of your revenue. Okay, and let's say if the company has sold out the same asset for $400, then in this case there will be a loss of $200 which will be charged to the loss on disposal of asset. And please let me add one more point here. We charge this depreciation expense over the useful life of asset in which we expect to receive future economic benefits. Now let's solve some questions for better understanding. So first of all, we have question number 1 here. What is the purpose of charging depreciation? To allocate the cost less residual value of a non-current asset over the accounting periods expected to benefit from its use. And yes, it's the right option as we just discussed. Now next we have question number 2. What is the profit or loss on the sale of the machine? J sold a machine which originally cost this amount. At the date of sale, the accumulated depreciation on the machine was this amount. The sales proceeds were this amount. So basically we have the sales proceed of this amount from which we have to compare its carrying value. Okay, so the carrying value will be original cost less depreciation or accumulated depreciation, which is 8940. So it will be 5960. And if we compare both of these amounts, then you can see that we are earning profit of 1495. So the correct option is D. Now next we have question number 4. What is the profit or loss on sale? A machine was purchased in Jan 06 for this amount. Depreciation was charged 50% per annum on reducing balance method, with a full year's charge in the year of purchase and no depreciation is charged in the year of disposal. The company's year end is 31st December. The machine was sold on 3rd of April 010. Okay, for this amount. So that means from Jan 06 to December 06 we have used this machine, right? So it will be the year 1. Similarly, we have used it for year 07, then we have used it for year 08, again we have used it for the year 09, and in the 5th year we have disposed of this machine. So that means in the year of disposal we will not take its depreciation, but for the rest of 4 years we will calculate its depreciation, and we can calculate it using reducing balance method. For example, we will multiply it with 50% 4 times, multiply by 50%, 50%, and again we will multiply it with 50%. So our carrying value of the asset will be $4,000. So if we compare sales amount, which is 2500, with the carrying value of our asset, which is 4000, then we can see that we have made loss of 1500. So the correct option is option D. Now next we have question number 5. Which of the following are possible values for the disposal proceed and profit on disposal of the disposed asset not removed from the register? Phil's non-current asset register shows a carrying amount of this amount. However, his non-current assets account in journal ledger shows a carrying amount of this amount. So that means there is the difference of $20,000 between both of them. And we are comparing non-current assets register with journal ledger. Okay. Phil has discovered the difference between the two has arisen because he has not removed a disposed asset from the register. So in order to solve this question, let's create this performer. For example, first of all, we have amount of sales, then we have amount of carrying value, and as a result, we get either loss or profit. And one by one, we will check all of them until we find the correct option by putting their values into this performer. So first of all, we have disposal proceeds of $30,000. So let's say if we have disposed of an asset of 30,000 and we had made profit on disposal of $10,000. And when we will do reverse calculation, we will remove 10,000 from this 30,000. And as a result, we will get carrying value of $20,000, right? And it was the difference, so it means it is the correct option. Now next we have question number 6. What is the depreciation charge to be included in T's statement of profit or loss for the year ended 31st December 02? At 31st December 01, T's owned equipment which had cost of this amount. Okay. At that date, this amount had been charged in respect of depreciation. So it means they are talking about accumulated depreciation. T's accounting policy is to charge depreciation on equipment at a rate of 25% on reducing balance method. So we have historical value of asset which is 168,500, from which we will less accumulated depreciation first. And the amount of our accumulated depreciation is this. As a result, we will get our carrying value of this asset, which will be 102,000, and we will take depreciation charge of 25% on this amount. So the 25% of 102,000 will be 255,000, and it is the correct option. Now next we have question number 7. What was the profit or loss on disposal? A machine cost was this amount. It had an expected useful life of 6 years and an expected residual value of this amount, which is $1,000. It has been depreciated at 30% per annum on reducing balance method. A full year's depreciation was charged in the year of purchase with none in the year of sale. During year 4, it was sold for $3,000, and we are required to find out profit or loss on disposal. And we have already solved a similar question before, so I will suggest you to try to attempt this question by yourself. Now next we have question number 8. What is the accounting principle which dictates that non-current assets should be valued at cost, less accumulated depreciation rather than their enforced saleable value. And we had already discussed it in the start of our lecture. It is because of going concern assumption. After it, we have question number 10. What was the profit or loss on disposal? Again, it is the similar question we had already solved. There is nothing new in this question, so please try to attempt it by yourself. Then we have question number 10. Which accounting principle does this relate to? By charging depreciation, a business aims to ensure that cost of non-current asset is spread over the accounting period which benefit from their use. So basically it is the concept of accruals. For example, all the relevant expenses must be charged to the relevant period. Now next we have question number 11 and question number 12. The data for both of them is same. A bought a machinery for use in his business on 1st of November 04. He gave the supplier a check for 11570 and traded in an old machine. The supplier allowed him this amount in part exchange for the old machine. So basically it is the purchase cost, or you can say actual purchase cost of the machine, which is, let me write it here, our purchased cost is this amount, which is 11570, and we have also traded in an old machine and its cost was 4430. So that means it must be added into the value of our machine. So the total cost of our machine will become $16,000. A depreciate machinery on reducing balance basis at 20% per annum. The old machinery had cost of this amount. Okay, so we can say that it is the historical cost of our old machine and had been depreciated by this amount. So it is the accumulated depreciation of this machine. Okay, so now here we have our question number 11. What was the depreciation charge on the new machine for year ended 31st October 05? Because we are charging 20% and our total cost of new machine is 16,000, so we will simply take 20% of 16,000 and it will be $3200. Okay, now according to the question number 12, what was the profit or loss on the trade in of the old machine? Okay, so first of all we have to identify the sale value, and the sale value is 4430, and now we have to compare it with carrying value of the asset. The historical cost of the asset was 12000 and its accumulated depreciation was 5856. Okay, so as a result our total carrying value of the asset will be 6144, and you can see that the actual carrying value of this machine is higher than its disposal amount. So that means we had made a loss of $1714. So the correct option is option D. Now next we have question number 13. Which of the following is or are correct? The non-current asset register is part of double entry system, and it is incorrect. It is not the part of double entry system. We just maintain it as a memorandum. A non-current asset register is required in every organization's accounting system. Again, it is not necessary. And finally, assets should be removed from the non-current asset register when they have been fully depreciated. And again, it's also wrong. Assets should be removed from the register when they have been fully scrapped or the organization sold out them. So none of these statements are correct. Next we have question number 14. What other entry is needed to complete double entry for the part exchange value of $3,500? When M purchased a new car, she used her old car in part exchange. That means she debited the new car and she credited the old car. Okay. She has made the correct entry for the part exchange value of 3,500 in the non-current asset disposal account. So she had recorded this entry, so that means she is required to debit new motor vehicle at its cost. So the correct option is option A. After that we have question number 15. What was the depreciation charge on the machine for the year to 31st October 06? This question is similar to the previous questions which we had already solved. So you are required to attempt it by yourself. Now next we have question number 16. Which of the following are reasons for maintaining a non-current asset register? First of all we have option 1, to calculate the total balance outstanding on loans raised to buy non-current assets. We are not talking about loans here, we are talking about non-current asset registers purpose. So this option is incorrect. Next, to help in carrying out physical verification of non-current assets. And yes, it is one of the right reason. We can compare physical asset with a non-current asset register. Okay. And finally, to calculate profit or loss on disposal of non-current assets, and it is also the correct option. So that means option number 2 and 3 is correct, which is our option number D. Next we have question number 17. Which of the following should normally be recorded in non-current asset register? Location of each asset, serial number of each asset, and accumulated depreciation on each asset. All these informations are relevant, so all of them should be recorded. Next we have question number 18. If he sells office furniture for this amount in July 08, what will be his profit or loss on disposal? We had already solved multiple questions similar like this one, so you can attempt this question by yourself using the same method. Next we have our question number 19. What aspect of the transaction is recorded by this entry? J acquired a non-current asset and as a part of the purchase she part exchanged an old non-current asset. The entries in her journal include debit, asset disposal account, credit, non-current asset at cost. So basically it is the transfer of the original cost of old non-current asset on disposal, right? So the correct option is option C. And finally we have question number 20. What was the profit or loss on disposal of the asset? And it is very straightforward question. We have already solved multiple questions like this one, and I hope you can attempt this question also. So that's all for this video. See you in our next lecture.